Hello Rebels, this is the guide of how to download and use the free net worth tracker template. So if you go to the link in the description, download the free spreadsheet. You can use Excel Online for free, and we're going to show you how to use it to track your net worth and improve your finances.
Before we get into it, a quick disclaimer: we are not financial advisors. This is not financial advice. We want you to use this template and to think about what you're doing as you go through it and do your own research.
When you open the template, you will go straight to this page, which is the Start Here page, and Katie has incredibly written some fantastically detailed instructions of how to use it, including what to include, what to exclude, how to use it, links to articles and guides. So everything you need is here, or just watch this video.
So we're not going to go through that line by line now because we know that you know how to read. So we're going to just show you exactly how you should go about using this tracker template. So first thing to note is that we've got the dates starting from January of 2024. We're recording this in June of 2024. You might want to go back and fill in your numbers that you've had for the year so far, or you can just start in June. It doesn't really matter. Just choose something and start.
Exactly. The first section at the top left is the section Assets. Assets, Katie and I, definition of an asset is something that puts money in your pocket. So stocks, shares, ISAs, SIPs, all of that sort of stuff, an investment property, that is all assets. So we're going to start filling this in for an imaginary person.
Now we also have here cash emergency fund, because whilst that's not strictly an asset in our definition of it, something that puts money in your pocket, it is something that's incredibly useful for you to have to protect your wealth so that you don't need to sell investments when you have things that need to go out because life happens and things happen. So what we want you to do is to update these with what's specific to you. We've put in kind of generic names. I want you to go through and update it so it actually means something to you. So how would we do that, Alan?
So you click on cash emergency fund. Let's say our emergency fund is with NatWest, so we might put NatWest emergency fund, and then we would fill out the value. We're going to start in January, and we've got £1,000 in there because we've reached that first step. Then we've got stocks and shares ISA. Actually, like my ISA is with Halifax, so I would write Alan Halifax ISA.
And then how do we know what to put in here?
Well, what I would do is I'd get out my banking app, I'll check to see what the value of what I have in there is. So I might have, I know Katie's putting in £12,340, but we do this once a month at a monthly finance meeting, normally with nice coffee and a breakfast because it makes me feel good. And then we go through all of our accounts and update all of our figures to know how much we've actually got and whether we're moving in the right direction or not.
What you might want to do as well is we do this together as a couple, so we're going to have different lines for each of our things. So Alan's got his Halifax ISA. I'm going to insert a line here. I just did right click, insert, and I'm going to put Katie Halifax ISA, and then put what my value is there and so on, and work down the list. Now, you might not have anything in this top section. That is completely fine. It's just to know the very first snapshot and understand where you're starting from.
For example, we had someone in the group this week who said, I've just put my first £500 into my SIP with Vanguard. So you would actually update SIP and put Vanguard SIP. And then they would put, like, I've got my first £500 in, so they would update the value to £500. But it's wherever you're starting from. It is also key to remember, you might not think of yourself as an investor, but you already are. Because you probably already have workplace pensions which are invested for you that we need to understand. So Katie's got the example here, workplace pension from company ABC, and she changes ABC to Pineapple Limited because that's who she's working for, Rebel Limited because that's our company. And what you do is go and get a valuation from your workplace pension and stick it in here.
That sounds very grand, but all that means is finding your password and login normally to go and log in, look what you have and just fill it in. And this, as I said, what we already had here was just sort of generic dummy stuff for you to overwrite with your specific situation.
So that's the first section. You'll add in a bunch of figures there. And then we will move on to section 1B, which is optional. Now, we had some feedback last year that people didn't like tracking the headline financial number. They felt it would be better to track how many units. We have mixed feelings about this because, yes, you are directly responsible for how many units of something you buy. You're not responsible for the price, and the price fluctuates. It's volatile. So some months you'll look like you've lost money, even though you've bought more shares, and that made people feel sad, which I can understand. It would make me feel sad. However, we kind of believe you need to get used to volatility because it is the price of admission of entering the stock market.
Yes, and look out for week 6 onwards of Rebel Finance School to understand most of the terms that Alan just said about investing and units and things.
Katie likes to say it's a feature, not a bug of the stock exchange.
The fact that the price changes every day, every month, that is what I mean by it being a feature. It's not something like, oh, we should be worried about. That's absolutely normal. So if you want to, you can track units here. One thing I forgot to say above is throughout this spreadsheet, in fact, you only need to update these blue cells. Anything that isn't coloured in, that is automatically updated for you, because you'll have seen that this updated itself without me having to do anything. So what you want to do in this section is, if you choose to fill this in, you're going to mirror exactly what you had above, because you'd say, okay, Alan's Halifax ISA, how many units we had in there, Katie Halifax ISA, and so on. And we're not saying that you need to have different lines for different number of units because you're going to have loads of different funds. It's just to recognise that you're going to have different accounts, like you might both have an ISA, you'll both have different workplace pensions if you're doing this together as a couple.
So we might have 50 units each, and then the next month we buy an extra half a unit because you can buy halves. Katie was richer than me, she bought a whole unit.
Nice.
And you'll notice it then tracks the number of units going up each month. So that's section 1A and 1B. We'll then move on to section 2, which is debts. Ooh.
So debts is what you owe. So this is going to be things like we've put in the dummy data there, like car loans, student loans, credit cards, any debts that you have. Maybe you have some personal loans, maybe you owe money to friends and family. This is where you're going to capture all of this stuff, and you'll put it in here as a positive number. Even though it's something that you owe, you might think you need to do it as a negative, but we'll put it as a positive, and then the spreadsheet automatically works out and will add up the debts and subtract it to find your net worth below. So what should we put in here, Alan?
Let's say we owe £5,000 on our car loan. Student loan, we've got a whole host of information on that. Check out our channel. If you're planning on paying it off, it's definitely a debt, so we put in £5,000 for that, or whatever it was. Credit cards, this is only if you carry a balance. This is not if you pay it off in full every single month. So we'd have our Barclay card, which has a 10k balance, or whatever that figure is, and then each month you would update that to show how much you have paid off. So you might have paid off £265, and you'll see it like the figure goes down. So hopefully you're paying those off per month. But this is not like just every month putting in what you're going to pay off. That's daft. This is just debts that you're slowly paying down over time, and you carry a balance on credit cards.
And you're going to go and look up exactly what these figures are. We're just putting in numbers to give you an example, but this is a snapshot in time, but we want it to be a relatively accurate snapshot in time. So please do go and look up exactly what the value is as we go along.
And we're just going to copy these figures across because we're going to show that we do have some money in here, and maybe the pension's gone up a little bit. And the reason I'm updating those figures is because what you will notice after you put in your debts, it has this section down here that auto-calculates, which is assets minus debts. So the assets was about 46,000. You minus the debts, and that gives you your net worth for wealth building rate. And then Katie has done a fantastic sum that shows you whether this is going up or down each month, because that's what we're interested. Are you moving in the right direction or not?
The next thing we want to point out is that this line here, it says 4% of your net worth for wealth building. So remember, your net worth for wealth building is the assets that you have less the debts that you owe. And then from this figure, this is your current net worth for wealth building, and then we look at 4% of that, and that is how much you could live off a year for the rest of your life based on that net worth that you have. And the idea is that you can start to compare that to things, annual or monthly expenses that you have. So say, for example, say your mobile phone bill over the year was £1,000. Then you could say, oh, look, the investments that I already have cover that expense.
Forever.
And you can start to build that up and go, okay, how much would I need to have to cover my rent, to cover my going to the cinema, cover my Lego habit, whatever it is. Then you can start to build up and see over time and sort of tick off those little mini milestones along the way, and it helps to motivate you and get excited about doing this.
And eventually that figure will be bigger than all of your expenses, and that's how you know when you're financially independent. So that's section 1 and section 2. Let's move on to section 3, which reflects, we know that there are things of value that you have, such as the home you live in, but that do not produce you an income, so you can't live off them in retirement. And this is where you reflect that in your net worth calculator. It's very important, this distinction, because so many people retire with a lot of equity in their house but nothing to live off, and you want to avoid that because you still want to be able to afford heating and food when you retire.
And of course we acknowledge that those things have value, so that's why we capture them in here and separate them out. And you'll see that that builds toward your total net worth, which is the net worth for wealth building, plus these extra things that do have value but will not look after you in retirement. So let's put some numbers on this to help you to understand and to give you an example of how to fill in the tracker.
Let's imagine it's our actual Basingstoke flat that we used to live in. So it was worth 240 grand was our Basingstoke flat.
So you can see that's what we've put here, market value of the home you live in, if you're a homeowner. If you're renting, I'm sorry, you can't take credit for the value of the house you're living in or the
Nice
flat
try.
or apartment or whatever it is. And then you want to put in the mortgage on the home you live in, meaning how much you owe on your mortgage. Let's say it's 140,000. And you can see I'm putting this in as a positive number because that's how the spreadsheet works, and this will automatically work out the equity that you have in your home, meaning how much, if you were to sell your house, you would get to keep. So it does that minus that to give the 100,000.
And hopefully each month you're paying off a little bit of your mortgage, so the next month our place is still worth the same, but we've paid off a little bit of the capital. Katie's shown there.
Oh, I've done that wrong, haven't I? Need an extra
24
zero.
grand. Yeah. So you can see you've got a little bit more equity each month. You also have below your current accounts, premium bonds, savings accounts, because it's good to have cash lying around, kind of, but it doesn't generate you an income, and nearly all of the time it is actually a drag against inflation, i.e. you're not earning as much interest as inflation is going up, so you're losing money on cash, which is why it's down here as things of value, but it doesn't generate you an income.
So you'll see what I've done as Alan was talking is just go through and update these for your situation. And again, we do this as a couple. If you might do it as a couple, you might do it on your own depending on your situation.
And you might have however much you have in savings. That all totals up and it gives you a total amount you have. And then it also gives you your total net worth right down at the bottom. So the total net worth is like the stuff of value plus your assets gives you your total net worth. And then you can start to see whether it goes up or down every month.
Exactly. So that's what this change from last month does. And you can see that now we've got two different figures. The total net worth here, which is about 130,000. And then the net worth for wealth building, which is much lower because it doesn't include the equity in your home, of about 26,000. And that's why we really want to be very clear on those two different numbers so that you know what you can have that would look after you in retirement and not be fooled into thinking that this is money that you can use if you have no plan on selling your house and you're going to live in that house.
And what's really cool about this tracker, Katie and I started ours about 10 years ago now, and we have about 10 years of data going across the screen, and you can see how that changed over the years, how we did each month. It's fascinating, and you might be thinking, oh, I wish I'd started earlier. Well, start now, and in about 10 years time you'll be going, wow, look at this, and I can create a chart and all of that sort of stuff.
So one last little bit in this spreadsheet we want to show you is this section for the fun optional extra, I think it's fun, is are you a millionaire without realising it? If you were to convert how much net worth you have into different currencies around the world, in which ones of those would you be a millionaire? It's just a fun little thing to do to see. So you could choose whether you take your total net worth or your net worth for wealth building, and maybe, I don't know, I haven't looked up, but maybe you have 24 countries and then you're still at 24 the next month. I don't know the numbers. You would have to go in and put it into this link that we've put there.
Yes, click on the link and then you can fill that out to give you an idea. If you have £200 of net worth, you are a millionaire in Colombia, which always makes me happy knowing that. So let's move on, because these numbers actually build, and Katie has created an auto chart that lets you see what's happening.
So whatever you fill in here will automatically populate these charts in the next couple of tabs. So what you can see here is these are your numbers for the Jan and Feb that we filled in. The blue is your total net worth, so that was including your little bits of savings and your equity in your house. The orange is the net worth that you have for wealth building, so not including those bits, just assets minus debts. And then finally, these red ones at the bottom is your annual 4% figure, meaning how much of your annual expenses those investments that you have in your wealth building pot would cover.
And then what we're looking for is a chart that grows over the years and months to help you get towards your goals.
This really helps you to visualise what's happening and to start to make changes to improve how you're doing with your money.
Because what gets measured gets improved, and it will help you to focus on that. Then the final chart we have is the units. So how many units of an index fund, stocks and shares fund do you own? If none of that makes sense, come on Rebel Finance School, visit our website, look up the information, we'll help you figure it out, but it's actually quite an important number.
And a couple of quirks on this is that you might have units in different funds. So say the fund that you want, you can't actually get within your workplace pension. So when we're adding up the number of units, you're kind of adding up number of apples plus number of oranges. They're not necessarily the same thing, but it's just something that overall you can see your progress. And that's how you would want to look at this units graph and the units that you have overall.
So there you go, that is the net worth calculator and the free template that Katie has created for you to use. Have fun, give us some feedback. We've actually created a Google form to share feedback. In the links below, you can click on that and then select the chart and tell us what you think, or ask us questions like, why does it do this and what happens with this? Because we actually genuinely want to know. We build this stuff to help you get on top of your finances. We're not just doing it for fun, we're doing it because we actually genuinely want to make a difference for you.
The fun is a happy byproduct. I do enjoy creating these. So we'll see you next time. Please hit like and subscribe whilst you're here.